Hello, all you crypto aficionados, and boy, have we got some news for you today. First thing on the menu, Vechain has partnered with AGIX, or SingularityNet. No, this is not Vechain's attempt to get into the AI space. They're partnering with AGIX to reduce carbon emissions and tackle the climate change problem. Whether you believe in climate change or not, it is a big agenda on the world stage. And AGIX's people have said, the traditional mechanisms have consistently and miserably failed. And they're teaming up to cut down on carbon emissions. So in a joint statement, the firm said the partnership is from Cointelegraph, but other places have reported it as well. In a joint statement, the firm said the partnership will merge Vechain's enterprise data with AGIX's advanced AI algorithms to enhance automation of manual processes and provide real-time data. So better tracking in real time. And of course, they say AI and blockchain go hand in hand. Vechain, we know, has an excellent platform for tracking emissions. They've been in with the sustainability market for a couple of years now, especially via DNVGL. So, of course, Dr. Ben Gertzel says AGI deployed across millions of nodes around the world can't be taken over by hostile centralized forces. Blockchain solves that problem better than it solves the problem of money. So he did explain the partnership, and it would allow AI to identify new ways to use Vechain's blockchain data to optimize carbon emission output and minimize pollution. So Vechain has a lot of data. They can do a lot of tracking data, and AGIX would use their AI solutions to go through that data and optimize carbon emission reduction. Achieving a sustainable and environmental-friendly positive economy is an extremely complex problem involving coordination of a large number of different economic players. It's a problem at which traditional economic mechanisms have consistently miserably failed. Meanwhile, Vechain Chief Technology Officer said, blockchain and AI offer game-changing capabilities for industries and enterprises and are opening new avenues of operation. What I'm guessing this partnership will do, no, it won't have any direct effect on the price, but my guess is what it'll do is when you combine Vechain technology with AGIX, what it does is it gives rise to new products that many new people will actually use. And via DNVGL, we can push those products through. Now, it'll probably use AGIX's computing, which might involve their tokens. And of course, the transactions will be on the Vechain blockchain, which over the long run should actually help Vechain utility. Not really sure how much it helps right now. Probably not all that much because these projects do take a long time to flesh out. The products still need to be delivered and produced, but it's good. It's a good thing for the future. AI is really big. Blockchain is really big. Combining the two is kind of self-explanatory, especially in a mission like that where one side has data because of their tracking mechanism and the other side essentially has the AI capabilities to output solutions based on that data. So very, very good partnership. Nothing directly for the price right now for either avenue. I mean, getting in on the AI hype might help Vechain in the bull run, but that has yet to be seen right now because no one is really buying crypto at this point outside the meme coins. And of course, not really too interested in the meme coins myself, but at least it's a building block for Vechain to actually use in the future. The next thing I want to talk about, mentioning meme coins, is Pepe. And it looks like, unfortunately for you Pepe lovers, they did kind of rug pull. Sorry, but I don't think anyone's that surprised. No one's like, oh my God, how could Pepe the Frog rug pull on us? I put my full trust in him. Yeah, I don't think anyone's actually doing that. Pepe the Frog gave its investors the middle finger, it looks like. Now, there's two pieces of information that make me think this is a rug pull. One, the head developers seem to have changed the number of signatures required for large transfers down from 5 to 2, which makes it much, much easier for them to transfer and sell out. At the same time, there was 1 trillion, not million, not billion, but trillion Pepe coins that were sent to unverified wallets on the exchange. Pepe also dumped 22%. So they might have already started to sell out without us knowing. Now, obviously, Pepe was never really a long-lasting project. You can just look at it on their goals page. They basically said the primary goal was to actually make and sell Pepe-themed merchandise. Now, That is not a great use case to me in the future. It wasn't for DeFi. It wasn't really for NFTs. It wasn't for some kind of economic or industrial adoption. It was to literally sell t-shirts. And I don't think you can hang your hat on that if you're a Pepe investor. So unfortunately, it does look like they're going to rug pull. Now, would I get out right now? Yeah, probably. Some people are actually getting in right now because they think that it'll get like a dead cat bounce. I agree, it might, but over the long run, it's definitely a downward trend. It could repump at any time, but it does not look like the team is too interested in developing these Pepe coins. They could have just gotten a big unlock and sold out another bunch, but my guess is like you're going to see more and more of these transfers as they just did make it easier to make these transfers out of kind of like their treasury, more or less. So they're selling trillions of these Pepe coins. That's obviously going to impact the price. Even if it does get a repump right now, once they start selling off other stashes, it's probably going to torpedo the price right back down right now. So that's really not something you want to see if you're investing in a meme coin. Never really thought Pepe had the staying power that Doge has. I think Doge will still be the number one stable coin. I mean, not stable coin, meme coin out there for the foreseeable future. So the thing is, like, Shiba is also dumping as well. And the original meme coin definitely has all the staying power. But Pepe the Frog looks like it's giving its investors the middle finger and they're bailing out. I mean, like I said, it was to be expected because this was not a long-lasting coin. I think the founders just wanted to make a coin, pump it for some money, which they were very, very successful in doing, and eventually get out and rug pull, which looks like what they're actually doing right now. So the Pepe the Frog theme and the Pepe the Frog craze seems to be already on its way out the door right now. Unfortunately, that is the end of a chapter of meme coins, the latest chapter of meme coins. There's 3 billion in FTX that could be liquidated and that could crush the market. Now, I'm not saying this is going to happen, but it definitely is going to put more selling pressure on the market. If they have to liquidate it all at once, it would crush the market because FTX's holdings are more along the lines of Bitcoin and Ethereum. And obviously, if you dump Bitcoin, you will dump the entire market, which is very, very bad for us. So what's happening? I mean, FTX owes a lot of money. They need to pay their creditors, and it looks like they're going to pay their creditors in dollars. This is from XFX Street, but many other people have reported this on it too, on this as well. So SBF's FTX creditors could soon see their lost funds returned in US dollars, and they've actually teamed up with Michael Novogratz's Galaxy Digital to liquidate crypto holdings worth $3 billion. Of course, Novogratz really does not want them to liquidate all at once because Novogratz is heavily invested in the crypto market. And because he is very heavily invested in the crypto market, obviously this would be a roundhouse kick to the face for him as well. And he's going to try to do everything to actually lessen the effect of liquidating this, which means they might liquidate over some time or they might do some other method that I don't really know about. But they have selected Galaxy Digital to liquidate the $3 billion in holdings, and they're exploring options to return creditors' funds in fiat currencies rather than crypto, because they don't really have the crypto, obviously. FTX current administrators hope that staking and careful trading can help the platform liquidate $3 billion in crypto holdings to repay the customers. They're probably going to be doing some heavy market manipulation with the money they have, so watch out for wild swings, and they could actually be coming from FTX in the near future or possibly throughout the rest of next year. Not a great thing. And of course, the exchange's lawyers said in a court filing that hedging Bitcoin and Ether will allow the platform to limit downside risks when liquidating its crypto assets. But when you're selling up to $3 billion worth of assets, no matter what you do, you're going to make those assets worth less than $3 million because overall it is definitely a lot of downside. So through September, this might be the bear event that has us a bearish September. Hopefully we don't dump through 25,000, but I guess we could go lower because of something like this. Of course, like the current CEO, John J. Ray III, thinks that selling 3 billion crypto in one go would result in a massive decline, which it definitely would. And of course, that's why they tap Galaxy Digital, because Galaxy Digital wants to do what's best for the crypto market, because Mike Novogratz does not want to see his company or his holdings go down the drain. So they did actually think this through, and they are like choosing the right company. They will help FTX determine the type of transactions and investments that help preserve the value of their crypto holdings without influencing asset prices for market participants. That is probably pretty much impossible, but they can get as close as they can without affecting the market participants. And of course, we have to talk about the Fed stuff today. Jerome Powell was not overly hawkish, but yet he was still hawkish. He says the Fed will do whatever is necessary to ensure inflation gets back down to 2% sooner or later, including more rate hikes. But he did say that the Fed is going to be more reserved and more careful because, banks are suffering. And of course, the yield curve is too high right now with over 5% yield on many bonds. And that is going to hurt investment products besides bonds and treasuries themselves. And eventually it's going to affect the labor market. Plus the fact that you have that inflation has come down a little faster than they had expected throughout the summer. So maybe they'll go a little bit more dovish than we all think. So I think it was kind of neutral. And I think the fact that he wasn't extremely hawkish actually gave people a lot of confidence that Jerome Powell isn't going to do anything major and could actually stop the rate hikes altogether. Plus, yesterday's Fed chief also said that I think they're done raising rates for now. So I think that's given people a little bit of confidence, and that's why the market really hasn't dropped all that much since he made the so-called hawkish comments. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button. Thank you, and have a nice day.